Welcome to Short View Trading, your morning market hit for Monday, 30th of May. What matters today for traders, and what should traders be looking at if they want to trade markets on a 1 to 2 week basis? Swing trades on S&P equity futures and other equity futures and equity indices out there. Well, what an extraordinary 10 days it's been. The S&P 500 found some real key support Thursday, 10 days ago on the 20th of May. In fact, if you look at the chart in front of you now, this is what we call a Fibonacci retracement level. So a retracement of all the gains in the big rally from the March 2020 pandemic lows all the way through to the highs in the S&P 500 last year. And what we do is we look at key retracement levels, in this instance the 38.2% retracement level on the S&P 500, which gets you down to about 38.05. Now on Thursday 20th of May, the market dipped intraday to 38.07, so within spitting distance of that super strong support level, and then since then has been rallying pretty hard. Since then it's been breaking through key resistance levels on several occasions. In fact, initially resistance was at 4,000, the market moved pretty strongly through that, and then resistance came at 4,050 to 4,100, as you can see on this chart in front of you now, and the market moved pretty rapidly through that. And with strength on Friday, further strength on Friday, and again overnight in Asia, the market's trading up now at around 41.90, 41.95 at the time recording this video, 9 AM London time, Monday morning. So next key resistance level is the 50-day moving average. As you see on the chart, 42.73 that's coming in at. And whether or not we'll get there is a big question, but the speed we've been going at is pretty punchy. Last week's gains were very impressive. In fact, if you look at the chart in front of you now, we're putting up the weekly gains for key US equity indices. No surprises, led by tech, the area that's the most beaten up in the pullback over recent months. Bounce the hardest, that's always the way, that's typically the playbook. Philly stocks up the most, followed by the NASDAQ 100, but all indices in the US, as you can see, up on the week between 6+%, and even the Dow Jones Industrial Average, the laggard, still putting in around 6% gains last week. And actually it wasn't just the US, it was pretty global, particularly in the Europe. If you look at the chart in front of you now, you'll see key European indices also are all up on the week. The laggard here being the FTSE 100, amongst others, an index that's actually done really well this week. So it's bouncing less as the rest of the market bounces. So the key question is, where to next? Is this a rally like we saw in the back half of March, those 2 weeks in the second half of March, you'll remember, very aggressive and rapid upside? Or is it more of a sustained, enduring relief rally? Or indeed, is it simply a resumption of the uptrend? And whichever of those it is, how should you trade it on a 1 to 2 week basis as a swing trader in that sort of time frame that we like to look at? And interestingly, in that respect, some of our short-term models are starting to generate sell signals. Having given pretty chunky buy signals a couple of weeks back, they're now starting to move back on to sell. For example, the chart we're putting up in front of you now, just dipping back into sell territory. But it's not all models are giving a sell signal. Others are still neutral or even leaning towards buy. So how do you play this? Well, that's what we think about each and every day in the Daily Rag that's available to subscribers via the website. Or if you want a free trial, please click on the link below. We'll send you the Daily Rag for free for 7 days. No credit card details required. Simply give us your name and email address and you'll get that rag product over the course of the next 7 trading sessions. So what are we watching today and this week? Well, there's a ton of stuff going on, particularly in the US. It's the big data week, culminating in non-farm payrolls on Friday. Ahead of that, we've got ISM manufacturing as well. Those are big data points. Average hourly earnings will be watched closely, as well as ISM manufacturing new orders. Elsewhere, ADP employment, ISM services, lots of US data. Fed governors will be watched closely, listened to closely for their speeches. Any shift in the change of their tone, as we got some hints that may be happening last week. Will those hints continue? Then over and above that in Europe, we've got a lot of inflation data over the course of this week. First estimates of May inflation for Germany, France and the Eurozone. And then over and above that, some focus on the UK with consumer credit coming out earlier this week, along with mortgage approvals, albeit it's a shortened trading week in the UK with a double bank holiday at the back end of the week. So that's it from us. That's your morning market hit for Monday, 30th of May. Please do subscribe to these videos on YouTube. Simply click on the subscribe button or follow us on Twitter, LinkedIn and or Facebook. Thank you for listening. Stay safe, trade well.